So I'm Mona Dajani, and I've been doing clean energy transactions for over 20 years. Before it was fringe. I am the global co-chair at Baker Botts. We're an international law firm. We have a team of lawyers that just specialize in everything in clean energy, soup to nuts, from financing to tax equity to M&A, joint ventures, regulatory, anything you can imagine. So I'm very grateful to be leading that team. And I'm also an ambassador for the C3E. And it's been very helpful and very satisfying for me to see other women succeed in clean energy. So without further ado, I'd like to first introduce Melinda. Melinda, maybe you can tell us a little bit about who you are and your journey and your company.
Sure. So Melinda Baglio is my name. I'm the Chief Financial Officer and General Counsel at Clean Capital. Clean Capital is a fully integrated, diversified clean energy company. We develop, construct, own, operate solar and storage projects all throughout the United States. We have projects in, right now we're 26 states plus Guam. So we cover a lot of territory. I don't know very many people who hold dual titles of Chief Financial Officer and General Counsel. My background is as a lawyer. I went to law school to, some work in environmental protection, preservation in some way, shape, or form, and I wound up falling in love with project finance. So I was a project finance attorney for about a decade, and then I joined Clean Capital almost 7 years ago as the general counsel and head of acquisitions. The company was a very small company when I joined. I think I was like the 7th employee. We have about 80 employees now. And so I've held a lot of different roles at the company, and I've overseen a lot of different parts of the company. My current role, obviously as general counsel, I oversee our legal team. My CFO role is not a traditional CFO role in that I do not oversee accounting and budgeting. That sits with our chief operating officer, but I do oversee all of the financing. So for all of those projects that we own and develop and construct across the country, we have many levels of financing that we need to secure, which we'll get into a little bit more as we get into the seminar. And my job is to make sure that we have the most efficient financing for all of our projects, and as well as our corporate financing. So from the project level all the way on up. I guess I'll leave it at that for now and hand it over to Amanda.
Great. Thanks, Melinda. These are two tough acts to follow, but my name is my name is Amanda Zerla. I'm the Chief Development Officer here at GS Power Partners, and I have been here. I'm going on my 10th year at the company. So my journey within the industry is in synchrony with my journey at the company. I joined Green Street, GS Power Partners, basically 6 months or so after they opened their doors. So similar path as Melinda, and joining a company that was very, very small. We had a residential division at the time as a company, with always a grand plan to exit the residential space and then open or lean into a commercial sector, which eventually grew into being, an IPP of solar assets. So my journey was a unique one. I was really the first hire for their commercial sector of the business. So I saw, the true transformation of a company on, really day one to where we are today, which is, a company that owns about 260 megawatts spread across, I believe, 13 states. And we recently, last year, in May of last year, we had a really exciting milestone of partnering with DIF Capital Partners. So they came in, a large private equity infrastructure fund, and they acquired majority interest of our firm in May of last year. So that has been a really exciting time to be part of the company. Again, similar to Melinda, I've worn a ton of hats during my time here, all of which was helping me find my place in the company and where I want to see myself in the industry. So I did underwriting, I did door-to-door sales, I did cold calling, and I eventually landed in this development role that I have extreme passion for. And the development role here at Green Street is a bit unique in the sense that we do a lot of greenfield, or we did historically a lot of our own origination in greenfield, but we have pivoted a lot in the last few years into more acquisitions and partnerships. So over time, we just learned that, the size of the company and where we want to be is, we want to lean on partners that have strong presence in local markets, and we've had a lot of success of doing that. And my involvement is, bringing in those potential partners, negotiating those partnership contracts, and then overseeing, once it is eventually executed, overseeing the entire development of that project until it reaches that development NTP state, that we could eventually hand over to our construction team. So I think I'll pause there, and happy to talk more about it later in the Q&A session, but happy to be here and thank you.
Okay, great. Thank you, Melinda and Amanda. Wow. Amazing. So I guess the first question is, now, some of us got into clean energy because they really want to make a difference. Some of us got into clean energy because you can make money as well. And I know that both of those are important here, I think. So my first question is, how do each of your companies view what you're doing? Like, is it more you're making an impact for achieving mitigation, or is it more that you're just making money? I've actually seen people say that are in the space on publicly in seminars and conferences that the only reason they're doing it is just to make money. So I'm curious to hear what your company's respective views are on this. So Melinda, we start with you.
Okay, great. Clean Capital is definitely a mission-driven organization. So while we do, love that there is a good return on the projects that we are investing in, and certainly we have shareholders that we need to answer to, and show that there's a good return on our investments, we are also doing this to fight climate change, and really be part of the energy transition that we all know is coming and is so necessary. And I will give an example or some examples of that. We acquired a company 2 years ago called BQ Energy. It was a development platform that specializes in developing solar projects on brownfield sites. These are really hard to develop because the sites can be really tricky. There's additional expenses involved, particularly if there's any kind of mediation that goes along with it. But that is, we think, well, we'll talk about the IRA adders in a minute. That was a bonus that happened after we made the acquisition. But
I'm gonna ask you that question after this one.
Yeah.
So, but yeah, please, yes.
So even with the additional costs, which of course, higher costs means the returns are not going to be as rich, we think it's a good place for us to be investing for, for the future of our company. And we're good at it. So we've managed to, I think a lot of other companies may be struggling more than we are in developing those sites. So that's, just one example of something that we do that's, maybe not the easiest type of development, but we do it because we think it's the right way to be using that property that would otherwise be abandoned, unusable.
Great. That's great. That's good to hear. How about you, Amanda?
Yeah, I think I would say, a similar sentiment from Melinda, that we're somewhere, it's a healthy combination of the two. We're somewhere in the middle. At the end of the day, we are a business, so making money, of course, is important, and meeting certain return hurdles are, of course, important. We all have bills to pay at the end of the day, but the impact to the environment, the mitigation against climate change is also a huge driver of just the passion of each person that works here. You can tell that every person that works at our company, and I think I could probably confidently say this across most companies of my size, is there's a strong passion for what we're doing. And I actually often, when we complete a solar system and the design's complete, we go out, we take gorgeous pictures or do a nice drone footage. I love to share it to the company as just a reminder of look at what we're doing. You know, it's really easy to just get caught up in answering emails all day. You know, that's my job is I answer emails and sit behind a screen. And it's easy for a lot of people, especially some of the younger generations that are just entering the workforce, to kind of get lost in that. So a nice reminder of this is what we're actually all doing. Those 1,000 emails resulted in that solar farm, and that solar farm resulted in, you know, saving 20 acres of trees getting cut down and reduced greenhouse emissions, whatever the metrics may be. So I think, yes, there's definitely a healthy combination between the two. And one interesting thing that, you know, admittedly, Green Street hasn't done a ton of historically, but has become a strong focus of ours is agrivoltaics is a big, it's a big initiative across the industry. All the good that solar does, there is a little bit of a downside of where we're land grabbing, and we're land grabbing in a lot of agricultural rural communities. So at some point we have to play nice or we're taking out a majority of the agricultural land throughout our country. So it has become a huge focus of ours to incorporate and implement, you know, dual use property, sustainable land development, not just for the 25-year lifespan of our asset, but that it can continue to support agricultural initiatives as well. And I think that ties, you know, very heavily into climate change and just environmental impacts.
That's great. That's great. Well, I'm going to pivot a little bit. As I alluded to earlier, when we were talking about, you brought up Melinda, the IRA. Why don't we talk now? Let's pivot. Let's go right into it now about the IRA, the tax incentives, government policies. It's been 2 years since the passage of the IRA. And I've heard from, you know, some developers, some sponsors, IPPs are very happy. Others are not. So Melinda, can you give us a brief overview of how the IRA changed the way we finance energy projects in the United States?
Yeah, absolutely. And I'll just start with a really, really quick, I mean, the IRA, the Inflation Reduction Act, there's a lot to it. But I'll give a quick kind of reminder, refresher for anyone who doesn't do this every single day. Historically, clean energy projects have benefited from tax incentives that help to facilitate the financing of the projects that we're talking about here. I'm going to focus on the investment tax credit. There are other tax incentives, but that's the one that I deal with every day, and most of us in at least our sector are most familiar with. So the ITC is the investment tax credit, which allows the owner of a solar project to claim a tax credit for an amount that is based on the value of the project. And I'm being very general here on purpose to try to keep it as, you know, high level as possible. Happy to get more into the weeds.
But this is great. This is great. Please, yeah.
And so that has been something that, you know, historically has been part of the renewable energy, you know, boons over the years. What has always happened, and I've been doing, you know, renewables projects since 2008, is you get these tax credits are put into place, but then they step down over time. So they might be 25%, and I can't remember all the step downs from the years, but they'll step down to 20%, then 15%. But then Congress will get together and they'll, you know, put them back up at the top end. And there's just this constant sunsetting. And so if anyone's ever heard the term the solar coaster, that's kind of what we mean, is like the ups and downs of the tax incentives that we're constantly riding to try to figure out, okay, these incentives are sunsetting. Oh, wait, they're back. Oh, wait, they're back again. So one of the things that the Inflation Reduction Act did was it codified these incentives for a long period of time. And so you have this 30% investment tax credit that's available for, I can't remember the sunset year at this point, I think 2035. But don't quote me on that, but it gives us certainty, right? And so as we're developing our projects, because the development life cycle is quite long on some of these projects, you need certainty. You need to understand like what is going to be available for you for financing. So that was the primary, you know, kind of big deal thing that the IRA did. The IRA also included some adders that allow you to get more than 30% if your project meets certain qualifying factors. And so some of those factors are if you are building your project in an energy community. So, you know, maybe a site that was formerly used for a coal plant. Another adder, and it's been a while since I've talked about the adders, but there are adders for low and moderate income offtake. Help me out here, Amanda. What are the other adders?
We hit energy community, we hit LMI, domestic content.
Domestic content, right? Using equipment, you know, created in the United States. So anyway, so there's all these different pieces that allow you to then add more than 30%. And so you can wind up claiming more than the 30% investment tax credit, which allows you access to more financing. So that's my, I guess, not so brief overview of what the Inflation Reduction Act did for us.
Well, this is very helpful. I think it's really helpful. I think, Melinda, can you, since we're on this topic, can we talk about transferability of the tax credits and how that has changed how we're financing renewable energy projects since you're on a roll here?
Yeah, I guess that was the other big change in the IRA was that you no longer need to, as the owner of the project, you no longer need to be the one taking the tax credits. You can actually sell the tax credits to a third party. So what we have historically done to allow developers to monetize those tax credits is we've created these kind of complicated tax partnership structures where you have the developer over here, typically does not have a lot of tax liability or tax appetite, so they can't really take advantage of the credits. They partner up with like a big bank, like US Bank is a big one in the field. They create a joint venture partnership, and the partnership then can pass those credits on to the owner, onto US Bank as the owner of the project. And so it's kind of a complicated structure, but we've gotten really good at it over the years. For some smaller projects, it can be difficult because it costs money to put that structure together, like legal bills. We have to pay Mona. She's not cheap. And so one of the things that the IRA did was they said, you can sell these tax credits. And so for companies like mine, we develop small projects. This seemed like a great option for us. Rather than implementing these complicated tax partnerships to monetize the credits, we were just going to go and sell them. Well, unfortunately, it's not quite that easy. So if you are selling your tax credits, rather than using this complicated partnership structure, you're losing some of the economics. You are losing something that's called the step up in basis, which we're not going to get into that on this call. Happy to follow up after on what that means. You're also losing the ability to monetize the depreciation. Also not getting into that on this call, but the economics are not as attractive. So now what people have done is they have a hybrid structure where we still put into place these complicated tax partnerships that have an added layer of being able to transfer the credits. So I feel like, I don't know, transferability isn't as great as I had hoped it was going to be, but I also recognize that the market for tax credit monetization it's finite. And the more we want to invest in renewable energy projects, the more players we need to be participating. And so this is going to open the market up in that sense. It's just not going to make it any easier for sponsors like me to actually, see the benefits.
Well, that's still fine, right? I mean, there are some that are taking that it works for them, but they have like I've been seeing it successfully utilized in like big portfolios, so so now I'd like to pivot to Amanda. And Amanda, I know you do this all day and night. And which is, I'd like to talk about more of the, the M&A piece, and how that helps joint ventures, mergers, acquisitions with, the role in financing at the end of the day, these projects. Maybe you can walk us through what what you're doing, what you see, how that helps.
Yeah, absolutely. I'm just trying to think of where to start. This is Partnerships, joint ventures, M&A is a strong passion of mine. And I've seen, a bit of a roller coaster of what's trending over the years. I think it's important to start with, I'm a huge advocate for partnerships. Partnerships meaning, of course, there are the major players in the industry that are, several hundred people, large companies that are able to kind of divide and conquer all of these things. But coming from a company that has, 60 to 70 employees, that is, still really, you know, breaking its ground and entering into the space in a real meaningful way. What we noticed in my history at the company is that, when we were doing a lot of greenfield, we were able to go into new markets and tap into it, figure out the programs, figure out the development, understand the permitting requirements. But it was eventually reaching a point of just, we don't have the local boots on the ground aspect, even though it's something that we're good at, we understand. It's just when you start to branch out into different states, the only way that you can, keep up with that is you start building a much larger company just to be able to support, the boots on the ground effort that's required. And that's where, we took a step back. This was probably, say, about 6 or so years ago, from the greenfield efforts that we were doing, of why don't we focus on what we're really good at, which is understanding the financing of these deals, what goes into being an owner and operator of solar assets, and then just look for really strong local solar developers that can act as those local boots on the ground, that already have the relationships in a particular market. They already have spoken and dealt with these utilities. They understand the local governments. And it just gave us an opportunity to realize that there's a lot of synergy in just playing off each other's strengths rather than trying to be a company that does it all. Why don't we just partner with the right group so we can all accomplish what we're looking to accomplish at the end of the day? And I think that has allowed for, exponential growth in a pretty short period of time in, Green Street's life cycle. And what I've noticed, just to shift a little away from that, is that, when we entered more into this partnership strategy, we focused heavily on your classic, NTP or COD, notice to proceed, or commercial operation date, MIPAs. So just buying projects, your classic buyer seller relationship. And, over that worked out for a while. But what I have found is starting to transition is that, that is not a true partnership mentality, is what I'm finding. It's a buyer and it's a seller. And then what's happening is I'm noticing a gap a bit, and there is a misalignment in interest for long-term partnership goals here, of the solar developers having just one thing in mind, which is, maximize their developer fee by whatever means necessary and get the project to NTP by whatever means necessary. And a long-term owner and operator that cares about optimizing the system so it produces as much energy as it can produce. It cares about how the project was presented within a local community, because we're going to be the people that are we're in that community for the next 25 to 30 years. So the reputation side, the performance, the optimization of these assets are very important to owners and operators, not so much on the developer sides, who just, are more in the business of getting it to a point, flipping and selling. And there's nothing wrong with that, but it did make us want to take a step back and think of, how do we realign ourselves that we're both really working towards that same end goal of developing, a world-class asset that complies with all regulatory requirements, complies with all permitting requirements, that we came into a community and we didn't bulldoze our way through by, threatening case law to get a project permitted, handling it very delicately. And that's where my company, I know this isn't new and it's definitely not groundbreaking, is we're starting to shift more into more joint ventures. So full transparency, I have yet to transact on a joint venture myself, but I've talked a lot about this over the past couple of years. I've spoken with many companies that have executed on joint ventures, and that's something that I saw truly as, okay, this is now realigning our interests. This is now having these, us being essentially providing the capital for a project, which solves the developer's immediate needs. Typically the case, there's usually capital constraints. We all understand development timelines and risk that's associated with it. So now they feel strong and safe that they have the financial backing of a larger company. And we feel, more at ease that now this partner is going to develop, engineer, and get this project to a point that is something that we'll be proud to own for the next 25 to 30 years. So that's been a really interesting shift. And I think that that does pivot a bit into, I think it's just become more common, I think, for developers, small developers, to be seeking out these types of partnerships versus maybe going out for your standard conventional development loan, right? I think that was, I'm not saying that that popularity is gone. There's plenty of development loans going on in the industry out there, but with a lot of conversations I've had with other solar developers, that is something that, they're shifting to, that they find more ease and comfort in this type of structure over the development loans. Because again, development is risky. Development timelines are very unpredictable. When you lock yourself into a development loan, you're really exposing yourself around a lot of uncertainty of hitting certain milestones. And then partnering with a GS Power Partners is it's a little bit of a safety net, because we're both looking for the same exact thing at the end of the day, is to build that asset and move on to the next one.
I just want to say I completely agree. And I will just say also that I have seen really more and more joint ventures, not just with smaller, but all the way to very big utility scale. I'm seeing so much, that they're, and this, collaborating, they're joint venturing, when even I'm seeing competitors come together.
Yeah.
And they're building successful projects. And part of the reason they're coming together is because, like you mentioned it, Amanda, you talked about it. It's like scale. This is how you can scale quickly, by spreading some of the risk. So I think, the collaboration, joint ventures, just like what you said, the M&A, I think that's critical. And I'm seeing more and more, and it's across the board. And I think as women, we're very good at that, at really fostering. Yeah, at really fostering and not being so black and white, like you're either on the other side, you're either with me or against me kind of thing.
That's right. It's the us versus them mentality that kind of comes with some of your more, traditional types of structures. This is, when a joint venture is created for both sides, you can consider it an extension of your own company instead of that's a me problem or a you problem. It's an us problem. So let's work through that problem together.
Right, right. That's great. So, Amanda, what about regional factors that may impact the viability of some of your projects, maybe? And that's also big picture financing question. How does that regional differences, because you're all over, you guys are in a number of states. So can you talk to us about that?
Sure. Yeah. I mean, the United States is fun because, we have 50 states, which is 50 countries with all their own policies and legislations and goals within it. So, that is probably understanding the nuances of regional markets is probably the exact reason why we felt so strongly about pivoting to more of a partnership model versus our own greenfields. And that was because we realized the true value add of partnering with companies that are experts within a specific region or territory. There are just too many nuances across, not even all 50 states, even just a few target markets. Even that's hard to conquer, fully with a, 60 to 70 person company, right? So we really wanted to leverage the impact or the presence that these partners have in these local communities, down to how they approach certain municipalities, down to what relationships they have or insights they have with certain utilities, because they have been speaking with that utility directly for the past 6 or 7 years. Whereas, Green Street might be stepping in and, they have no relationships on the utility side. They don't understand the politics that are behind the municipal permitting process. And I think that is exactly why there is so much success in this partnership structure. And overall, it does tie back to financing, is because you're able to lean on and leverage these developers that are members of these communities that we are trying to, build solar in. And I think that is one of the biggest factors of having a, a successful development cycle of a project and the overall success of the project reaching construction completion as well. It's all about your what impact or what presence you have within a certain community and playing off of that. And trust me, coming from a woman perspective as well, I have gone to planning board meetings myself in some really small rural type of communities, and they did not take fondly to a younger woman, stepping in that and telling them how solar works or however it may work.
Oh.
That was a challenge that I had to kind of overcome a bit, and understanding the politics that just kind of come into play here. And I need to be honest with myself of how can we, get over some of the politics and antics that are surrounding these, regional landscapes. And that's, we partner with the people that know these municipalities. We partner with these people that don't, see me coming into a room and it's a stranger walking into their community that are just there to make a bunch of money. We are part of your community. We're going to be here for 25 years. The developer is someone that respects the community more than anybody, right? So I think that the regional factors of all of those things is what really drives the true importance and success of these JVs, and finding the partners that just know the ins and outs of a market and can rinse and repeat as quickly as possible, rather than coming in as the stranger in the
room. That's great. Did you want to say something?
Yeah, I have two things. One is I couldn't agree more, and King Capital is employing a very similar strategy. We have a lot of regional partner developers that are focused on a specific region because it's just much more efficient to have the experts on the ground. And I also couldn't agree more about the joint venture structure. We've tried lots of different structures. Yeah. And that is a good way to have everybody's interests aligned and to kind of be in it together. So I just wanted to amplify everything you said there. Totally agree. I'm seeing it too.
And you both would say that, I have limited visibility. I have a number of relationships in my network, but from your perspective, you would agree that the JV structure is becoming increasingly more popular, right? I feel I'm seeing a lot more of it on my side, but just curious for your guys' perspectives as well.
Yeah, I can only speak to what we're doing, and we are doing. We are to the extent that we are embarking on more partnerships, which at some point you get saturated. Yeah. We are looking at them as more of a joint venture than sort of an exclusivity. We'll buy the projects when they're ready to come to, when they're ready to be built type of thing. Right. But Mona, I mean, you with your clients, you certainly have a broader view on what's happening.
Yeah, no, I totally agree with both of you. Violently, I agree. And I will say that it is, part of the value add, like you're saying, we want to partner with more local. That'll save you time. That's money, but also I think it's important for people to realize to use their counsel, use your counsel. We know so many. I mean, I talk to you guys a lot and I say, hey, what are you looking for? Because we know a lot of potential partners. So, so reach out to your counsel. That's another value add that at least we give. And really the name of the game is you want to scale. You want to save time. And then you want to rinse and repeat. You want to be able to do it all over again. And if you have a successful partnership or JV, and there's many ways. There are some, for example, and Amanda, I'm curious to hear about your experience in this. There's some that will just take a minority interest. There are some that they're coming into the U.S. for the first time and they just want to take they'll take a minority interest and just watch and not do anything. They just want to learn. And there's others that are much more active. I don't know if maybe both of you, if you have like a set idea of how you expect the JVs to work? I mean, do you only like minorities? Are you 50-50?
Yeah.
How does that, maybe you can just give the audience a flavor.
Sure, yeah. I mean, the JVs is a new initiative for us, but what
Okay.
we're thinking at the moment and where we're all aligned on the, both our management team and up to our investors is a
Hmm.
50-50 split. That's where we're
Okay.
seeing the interest. And I understand that every company's situation is different, so it may vary,
Hmm.
but for us,
Hmm.
it's leaning again heavily into the playing off each other's strengths. And that's where we see
Hmm.
50-50 being a true, dual effort on both sides of leveraging each other to get a project done. So for us, we have really strong legal resources. We obviously have the capital as well. We have a very strong engineering department too that helps with, with optimizing system design, which eventually helps with getting us in front of municipalities and planning boards. What we don't have a ton of experience in is, we don't have those boots on the ground going and meeting with these permitting authorities. We don't have a strong, origination strategy whatsoever because we rely heavily on the partners. So, our partners, those are the things that they're great at. We know how to find landlords. We know how to speak to these permitting authorities. We know how to talk to these people and get a project to this point, but we actually have no legal resources. We have no idea about engineering and optimizing an engineering or a site plan for a system. So for us, the 50-50 split just it directly reflects that true partnership spirit that we're trying to get into of really dividing and conquering the work by playing off each other's strengths.
Hmm. Yeah, Melinda, do you have anything to add?
I would just say that it depends a little bit also on the developer. So for some
Hmm.
developers that have a little more experience and a little more expertise, we're more hands
Hmm.
off. And for other
Yeah.
developers that are maybe they are not as, maybe they don't have as much expertise, we'll be a little bit more hands-on in the development
Okay.
process. So I think, in terms of how much oversight, it really depends on what
Yeah.
their, and then of course that also impacts the value of the deal, right? We're willing to pay
Right.
more, they can
Yeah.
do more on their own. But I agree with everything Amanda said in terms of like how you would split things. That really just, it varies, but in an ideal world, we're partners, we're equal partners.
Right. And I just want to raise that the JV and the partnership can be more than one entity. Okay. It could be three, it could be four. I'm working on one right now that's
Wow.
seven different entities. Yeah,
Wow.
altogether. Yeah, it's large.
Are you able to give a little bit more insight into, the multi-party JVs and how and why it's split or set up that way? Just very high level.
Yeah, just super high level, of course. Each one, and Amanda hit the nail on the head here. Each one is bringing something to the table.
Got it. Okay. Yeah.
It could be land, it could be infrastructure, it could be workforce, it could be
But
technology.
yeah, yeah, for sure.
Yeah. And
That's exciting.
so yeah. So today, my former law partner, Christine Lagarde, um, the ECB lowered the rates by 25 bips today for, of course, ECB, so not us, but we saw some rates go down. And Melinda, I thought I would ask you if you could talk about how the interest rates are starting to come down. They're expecting, they're saying right now the market is betting over 100 bips by the end of the year. I don't know, but it did come. Okay.
I'm not taking that bet.
Okay. So tell us how interest rates are affecting financing for renewable energy projects.
Yeah. So, I mean, obviously, higher interest
Yeah.
rates, it impacts the economics of the projects. But I think the less obvious is that it flows through every part of the project and every part of the life cycle of the project. So what we were seeing in the last couple of years as interest rates were so high, there was a mismatch between what we were willing to pay for projects and what sellers thought the projects were worth. So we saw a slowdown in the M&A market. Things were not closing is, we were not seeing as many deals close as we, would have in another year because of the high interest rates. And then what happens is the seller expectations start to align with reality. And so now a lot of those projects have actually come back to market. We just closed a project the other day. We haven't announced it yet, but publicly, but it's a project that's been in the works for a couple of years. We've been, working with the seller and, trying to get there. And every time something changes, and again, solar coaster, there's always changes. Our expectations have to shift a little bit. So, obviously as interest rates come down, that's great. I think it'll just make financing projects more easier, more affordable and easier. And less capital constraints mean more projects get built and more projects get transacted on.
Melinda, I would just like to add on one thing, because it was a great point you brought up of the expectation of what sellers think they're going to get and what the projects are worth, right? We were actually, and it's just something for us in the industry to think about this, is we were in the middle of an already executed partnership when this happened, and we did not plan for that. So it created a conflict for us of, all the project level assumptions looked great, but the macroeconomics were diminishing our returns. And unfortunately, we were already in contract. We did not contemplate, this once in a lifetime thing happening, which feels like that happens all the time in the solar space. And we were able to work through it eventually, of course, but it created, a lot of challenges for us on the deals. What was a really attractive portfolio all of a sudden wasn't. And it's just something I'd like to note of, if it seems like it's really impossible that something like this would happen in the solar space, it probably will happen. And you should plan for that accordingly and make sure both partners are on the same page of how we respond to each other. If there is a once in a lifetime event that occurs. So.
Yeah, that's great.
Yeah, that's awesome. Thank you both. I want to now pivot a little bit and get a little more personal with you both as we're doing our final stretch. What have you learned? What have you learned that you can talk about to our audience when you first started in this field in clean energy versus now? Is there any tips or anything that you want, any pearls of wisdom that we can give to our audience members? I'll start with you, Melinda.
Sure. I think the first thing that comes to mind is don't ever feel like you're boxed in. I spent a decade as a project finance lawyer at a law firm, and then I joined this company, and I was like, well, I'm just a lawyer. Don't ask me about those numbers. Don't ask me about any Excel.
You're the CFO now.
What?
You're general counsel and CFO. That's amazing.
Yeah. And part of it was just realizing that I actually understood a lot more than I thought that I did. And that I had value to add in areas other than the legal, part of what we were doing. And obviously not every lawyer is going to want to do that. Some lawyers just want to be lawyers, and there's absolutely nothing wrong with that. But it was interesting to me. And so I sort of started stepping outside a little bit, and here we are today. And actually I'm not the only lawyer turned, C-suite commercial person. Our CEO is a lawyer by training. And our chief investment officer was a practicing lawyer before she joined the company. So, it's, I think, and on the converse, I have people on my finance team who very much know how to read the documents and, know what to think about from a legal perspective. And they're really the most valuable people on my finance team because they can kind of flex in both directions. So I think whatever your expertise is, if you feel like, oh, I kind of want to push over there, like go ahead and push over there, see what happens.
Great, thank you. Yeah, thank you, Melinda. Very good. Wow. So, Amanda.
Yeah, I mean, obviously second everything Melinda said, 100%. I mean, I had a very interesting journey as well. And I got here by, stepping into uncharted territory multiple times before I really found what I was passionate about. And I don't believe this is where I'm going to land. I might, in a year from now, it might be something else that I find super interesting. So the only other thing I would add is just, in this industry in particular, you have to be open to change. You have to be familiar and comfortable with, some uncertainty. The renewable energy world, solar in general, there's a lot of, variable components. A market opens, then it closes. Elections impact things. Unfortunately, renewable energy has gotten very centered around politics. It's a sensitive political discussion at this point. But all that to be said, that the whole industry is dealing with it. And it's similar to don't box yourself in, but it's the same from, a company standpoint too, of you have to be willing and excited to adapt to change. If you don't, it will be hard to be successful in this industry because, every day is a completely new day. What was a really strong market today could be a terrible one tomorrow. So, just roll with it, have fun with it is what I could say. And just, learn to get comfortable with some of the uncertainty because everyone in this space has eventually learned that. So,
I agree 150% with both of you, what both of you have said. I will just also add for me, what's super important is I call it the Jay-Z effect. It's to be resilient, you know, and you're going to always have rejection. You're always going to have, things not go the way you want, whether it's in a deal or it's with a colleague or anything. So it's so important to just be resilient, get back up, and keep going at it again. So that's one of my pearls of wisdom. Amanda, you kind of hit on this a little bit, and I think that a lot of people in our space are, anxiously awaiting about the outcome of the election. And of course, without going either way here, let's just talk about the election one way or the other without getting into personal details. Some people are really afraid, that if there's a material change in administration, that it could affect renewable energy projects. So I'll start with you, Melinda. Maybe you could leave us with what your views are. What do you think?
Yeah, so I guess I have a couple things to say about this. One is that this is not a partisan issue.
Yeah.
It is just now part of our industry. I think, back when I first started doing renewables, I at least did it because I had a little bit of idealism. Some might have called me a hippie back then. That's all fine and good, but it's just kind of mainstream at this point. It's not alternative energy. It's just energy. Right. So I think that generally speaking, the industry is going to be okay, regardless of the outcome. There may be some reduction in funding sources, or funding that is available right now may dry up or may be harder to access. But by and large, I think we're going to be just fine. And then the other thing is, and I'm actually stealing this from Becca Glazer. She and I were on a panel together last week at the Rise Leadership Forum, and she said something that was so smart. Becca's at Walmart now. And she said, this is not a 4-year industry. So don't think about it in terms of the next 4 years. Think about it in the terms of the next 40. And I thought that was great wisdom as well.
Amanda, do you have any thoughts on this?
Yeah, I mean, it's really interesting being, in this space for almost 10 years now. The first half of my career, I'll admit that I felt some anxiety around, one change in government could really hit this industry hard. But boy, has that changed in this 10-year cycle of me working in the solar industry. And Melinda said it very well. It's no longer, this little niche subsector. We are an industry that's here to stay. We are part of energy. It's not an alternate anymore. The the job creation that this industry has made. It's too powerful at this point that I think we're well beyond, an election causing, a major impact to the industry and growth of the industry. Could it slow some things down? Could it add some additional nuances and challenges? Sure. But just keep in mind that, we are 50 states, and a lot of the incentives of how these deals are, pencil financially rides heavily on state level policy. And sure, federal legislation can influence state legislation, sure. But there is also that added protection of it really boils down to, the state regulatory policy. And, there's some comfort in that as well. So agreed that I'm not nervous. I don't think that, this industry is going anywhere anytime soon. If anything, it would be, a blip. Maybe things could be a little bit more challenging, a little less lucrative, but
we love challenges.
We love it. So
yeah, we love challenges. I think what you both said is pretty much what the press is saying, and do not be that concerned. It's there were 18 Republicans that were lobbying House Speaker Johnson. There's also there were some major energy companies also that were lobbying in heavily Republican states too as well. So I'm like you all, I'm not that concerned. I'm not that concerned. So in our last few minutes here, I wanted to, again, we're getting personal. If there's anything that you want to leave the audience with, and then after this webinar is over, we're going to do Q&A on another, we're going to go on another link. So I wanted to, Melinda, I'll start with you. Anything that you want to leave the audience with?
I think that, we touched on some really complicated topics during this very quick webinar. It went by very quickly. And I guess just rely on your experts. It's important to have a good team of experts. Mona is a great resource if you need legal counsel. And I joked before that she's expensive, but all lawyers are expensive. She's really reasonable. But it's important to have, to have experts that you can rely on, because as much as Amanda and I know about what we do on a daily basis, like other people know much more about the specifics and the nuances, and nobody can know everything. There's just too much. So find some good experts and rely on them heavily.
Thank you, Melinda. What about you, Amanda?
Yeah, I think it's probably related to that of, really lean on and build up your network. What I have found is that this is a super, open, welcoming industry that I have learned so much and grown so much on both a personal and professional level, just because of the people that I've met throughout these years, that we all have a really interesting perspective on things. So just always keep an open mind. This is in the grand scheme of the energy world, a newer industry. We're all figuring this out as we go. We're all, in this space together. So the more that we talk, the more that we address openly some of the challenges that we're seeing, is it's the quicker that we can resolve those, move on, and continue to expand the business. So it does go back into Melinda's of just don't box yourself, keep yourself open, put yourself out there, share your ideas, share your thoughts, gain insights from other people. There's nothing more valuable than that. And it has done so much for me personally, and I believe it will continue to do so.
That's great. Wow. Don't you want to just go and I would like to thank everyone here, the audience. I also want to thank my rock star panelists. I think you all agree with me. This was a very good hour, well spent, to hear their insights. So thank you. So we are going to sign off and sign back in again. We will answer Q&A. And for the Q&A, I just want, because I'm seeing some of the questions, we can't get into specifics, ladies or gentlemen. We can't get into specifics on deal terms. There's some very specific questions here, so we're not going to be able to answer those questions, but we'll be able to answer more general questions if you have any. So so thank you very much. I'm so grateful for all of you. Thank you.
Thank you, everyone.
Thanks, everyone. And Mona, thanks for inviting us.
Yes, thank you.
Yeah, it was fun. We had fun, right?
Yes. We'll see you on the other line.
All right. Bye.